Are you a veteran of the military or maybe a surviving spouse of a veteran who served in the military and want to use your VA benefits in order to purchase a home? What are the loan requirements? What are the pros and cons of using VA? Well, in today's video, we're going to go over all of that. We're going to talk about the 2022 VA loan requirements in order to purchase a home using VA financing. We're also going to talk about the pros and the cons of using VA. And in addition to that, we're going to address some frequently asked questions that I get when talking about VA loans. We're going to combine all of these into one video to make it really simple, easy to understand, so that you know exactly what you need to do if you're considering using VA financing in order to purchase a home. Before we get into the specifics of today's video, I just want to take a minute and say thank you. Thank you for your service. Thank you for the sacrifice you've given to this country. I appreciate you. Thank you. My name is Jeb Smith. I'm a real estate broker here in Southern California. And the reason I bring this up is because I'm not a mortgage professional, but I am someone who was in the mortgage business for a long period of time. And I'm using the experience, the expertise that I had at that time in order to guide you through the process. So what I'm saying here is I don't have a dog in the fight. There's no need for me to make this video to benefit from it. I'm really here to provide you accurate, up-to-date information so that you can use your VA benefits, which you've worked really hard for, in order to get financing on a home. And another reason I bring this up is because oftentimes a lot of lenders out there use VA in their name when doing things online. So if you search VA home loans or whatever, you might come across a company that has VA in their name and they seem like a legit company. Well, there are many legit companies out there, but at the same time, there's many companies out there that are looking to take advantage of veterans, charge, exorbitantly high interest rates and really just rake you over the coals in many ways. And so I want to point that out there. The Veterans Affairs is just there to back those VA loans. They don't actually lend the money. So oftentimes if you go searching online and you search these companies, you think you're dealing directly with the VA when you're not. You're dealing with a third-party company that is just doing a VA loan that the Veterans Affairs, the VA, is eventually going to back. So lastly, what I'll say is if you need a mortgage professional to guide you through this process, someone that's going to take expert care of you, a professional, do me a favor, click the link in the description below. I'll connect you with someone in my expert network that will take great care of you, that understands VA loans and can guide you through that process. Now that we've gotten that out of the way, one of the things that I want to talk about that I think is probably the most important, and it's a question that I get often, is how do I know if I actually qualify for a VA loan? What are the requirements with regards to time of active duty? How long do I have to serve? So what I'm going to do here is I'm going to read a statement, but I'm also going to throw it on the screen so you know the exact requirements that VA is looking for when doing VA financing. The first is active duty or served 90 continuous days. You've met the length of service requirements, which is generally 90 days in wartime and 181 days in peacetime. Or you've completed 90 days of active duty or 6 credible years in selected reserve or National Guard, or you're a surviving spouse of a veteran who died while in service or from a service-related disability and have not remarried. So that's one of the biggest requirements of using VA financing. You've had to met those service requirements in order to get your certificate of eligibility, which is going to be required when going through the VA loan process. Now let's talk about one of the biggest benefits of using a VA loan. One of the major pros, if you will, is that they allow 100% financing when purchasing a home. No down payment at all. And there's no cap on the loan amount. In fact, I've seen VA loans at 100% financing over $1.5 million, no down payment at all. So the biggest benefit of using VA is that you can purchase with no money out of pocket with regards to down payment. And another huge benefit of VA loans is that they don't have mortgage insurance. Typically, if you put less than 20% down when you're buying a home, if you put only 10% down, you put 19% down, anything less than 20% down, you're going to have mortgage insurance on that loan. So in addition to your mortgage payment, your property taxes, your insurance, there's also a fee for mortgage insurance. Well, VA doesn't have monthly mortgage insurance. There's no mortgage insurance premium every month associated with your loan. That's a huge benefit, which makes the loan really cost effective at the end of the day. But they do have a funding fee that's associated with VA loans. This is something that you need to keep in mind. Now, the funding fee is going to vary based on your down payment. Now, I know I just said you don't need a down payment when using a VA loan, and you don't, but sometimes veterans do put a down payment down on their VA loan in order to help the monthly payment fit their budget. So in the case that you put less than 5% down when using your VA loan, most people are going to do that 100% financing if they can qualify. So 100% financing, you're going to have a funding fee of 2.3% unless you're 10% or more disabled. So if you're actually more than 10% disabled, there is no funding fee. But if you don't have that disability, you are going to pay a 2.3% funding fee. What does that actually mean? That means for every $100,000 that you finance, there's going to be $2,300 added to that base loan amount. So if you purchase a home, a $100,000 home, and you put zero money down, you finance 100%, you're actually going to end up financing $102,300. A $200,000 home would be $204,600. $300,000 home would be $306,900. And you can see where that goes, right? So if you purchase $1 million home, you're going to have $23,000 added to your base loan amount. And the reason they charge this upfront funding fee supposedly is because it helps lower the cost to taxpayers since there's no down payment requirement or monthly mortgage insurance premium requirement. And it also helps them cover themselves against any potential losses if a buyer stops making payments on the loan. And if you do decide to put more than 5% down, but say less than 10%, you're going to have a 1.65% funding fee. And if you put more than 10% down, you're going to have a 1.4% funding fee. So the funding fee for zero down is significantly higher, and it's also because it's a higher risk loan because of the lack of down payment. Now, another requirement of using VA loan is that they require that you have at least a 580 credit score. But here's the caveat. If you have between a 580 credit score and probably somewhere a 640 credit score, there's likely to be some sort of overlay on the program. It's going to be a little bit harder to qualify. There's some lenders out there that won't do VA loans if your credit score is below that 640. And if you're below that 640, it's also going to require a manual underwrite, which means that it can't go through the automated underwriting system to get an approval. They're actually going to have to go through the file, dot the I's, cross the T's, if you will, and make sure everything is in order to approve you for a loan. And if we're being transparent, the lower credit scores are very hard to get qualified through VA, especially when doing 100% financing. So it's not necessarily a no if you do have lower credit scores. It's just going to be a little bit more difficult to qualify. And that's another reason that you really want to work with an expert in this case because, again, there are companies out there that just go by their guidelines. They have strict requirements, overlays on the programs. While VA allows a 580 credit score, many companies out there, as I mentioned, have their own overlay on the program requiring higher credit scores. If you talk to a broker in the network that I mentioned earlier, a lot of them have access to multiple programs, can likely have a company that doesn't have those overlays and have a better opportunity of getting you approved. Now, another requirement that VA has is that your debt to income ratio is less than 41%. And now this is one of those statements that's put out there. It's a requirement that VA puts on paper, but they don't really stick to it with regards to approving loans. In fact, you can go much higher on your debt to income ratio than what they say they will allow. I've had clients as high as a 67% debt to income ratio get approved. Now you're probably watching this and going, what is a debt to income ratio? Well, it is your debts versus your income. So what they do is they take all of your monthly debts. Maybe you have a car payment, you might have some student loans, you have some credit cards. They take those monthly payments and then they add the new housing expenses that are going to be associated with the home that you're looking to purchase. So the mortgage payment, the property taxes, the insurance, they add that together along with those payments that we mentioned earlier, the car payments, the credit cards, and they divide that by your total gross income every month. So if you made $120,000 a year, that's $10,000 a month. Well, if your new housing expenses are, say, $2,300 and you have $350,000 in credit cards and car payments, they're going to take that 23 plus the 350, which gives you 2650. They're going to divide that by the $10,000 per month, which is going to give you your debt to income ratio. And another pro of using a VA loan is that they allow you to exceed that 41%, as I mentioned a moment ago. So you can actually afford way more house using a VA loan, typically speaking, than you can that of a conventional, and even using FHA financing, which allows you to go up to 57%. So they're very lenient on the guidelines with regards to their debt to income ratio, as long as you have higher credit scores. The lower credit score borrowers, as I mentioned earlier, are going to be a little bit more difficult to qualify, but if you do have higher credit scores, you're going to be able to extend past that 41%. Now, one of the downsides of using a VA loan, one of the cons, if you will, and really the only con, if there is one at all, is that if you're purchasing using a VA loan and you're buying a condo, that condo needs to be VA approved. It has to be approved by the VA in order to do a VA loan on it. And depending on where you're located in the country, you may or may not have a lot of options out there. If you're somewhere around a base, a military base, chances are a lot of those condos are VA approved, but maybe you've since moved away from a base and you're in the middle of, nowhere, a base not around. Chances are many of the properties around you might not be VA approved, which means it might be harder to find a property. Now, there are ways to do a spot approval to get those complexes approved or those units approved when doing a VA loan, and that's a whole nother video. So it's not completely out of the question in order to do VA financing on a non-approved condo, but just know that one of the downsides is if you're purchasing a condo, it needs to be VA approved. And another thing is it needs to be your primary home. It cannot be an investment property. VA will only lend on properties that you plan to live in as your primary home. Now, I often get people reaching out, well, what if I plan to live in the home for a period of time? Can I turn it into a rental later? Yeah, and that's one of the frequently asked questions is, can I, after a certain period of time, turn that home into a rental and still have a VA loan on it? And the answer is yes. Typically, you want to stay in that property for at least 1 year before you turn it into a rental when having that VA loan on it. But you can do that, at which point you can also use your VA loan again to purchase another property at that time. Another question that I often get when talking about buying properties as a primary residence is I have, veterans working at bases all across, the country, if you will, saying, hey, if I work in Florida, can I buy a home in Texas? And the answer is only if your spouse or a dependent is going to live in that property. If you're not going to occupy it as your primary home, or your spouse or dependent, your kids aren't going to occupy that home as their primary home, you're not going to be able to purchase it using a VA loan. You're going to have to go some other means in order to purchase that home. VA will only lend on primary homes, which requires you or your spouse to live there during your time of service. And the last thing is that borrowers using a VA loan need to have full employment. They need to have steady employment for at least 2 years. Now, I realize we just came out of a pandemic, if you will. A lot of people have gaps of employment. They've missed some time during that, that time frame. Lenders are a little bit more lenient because of everything that's happened, but typically you want to be in the same line of work for, a 2-year time period. Now, if you've come out of the military and you've since gotten a new job, many lenders out there will allow you to use your time of employment towards those 2 years so you can actually still qualify for a loan even though you've just exited the military, as long as you have current employment. But it needs to be consistent, just like your income. That also needs to be consistent. You can't have, big ups and big downs in your income. It needs to be consistent along with the type of work that you're doing. So those are the major things that VA takes into account when seeing if you can qualify for a loan. Those are the primary requirements for 2022 with regards to VA loans. Now what I want to do is talk about some things that, come up oftentimes when talking about VA loans, and that is VA appraisals, right? VA appraisals get a bad rap. There's this idea out there that VA appraisers are harder on appraisals than any other lender out there, or that they don't come in to value like other appraisals. It's not true. It's just, a misnomer, if you will, out there with regards to VA appraisals. There are certain requirements that they have when going through the property. You can't have broken windows, you can't have exposed electrical, you can't have chipping paint. You can't have major issues with the property, right? They're there to not do an inspection, but basically to make sure the home is in livable condition, that it's in good order, right? This does not substitute a home inspection by any means. You're also going to get a home inspection, but the appraiser is there to make sure the value's there for one, and they're going to use comparables just like any other appraisal, but they're also going to make sure that the home is in good condition. That's a little bit different than conventional appraisals where they're just there to appraise the property for value purposes, right? VA appraisers are there to do a little bit more in-depth analysis of the property, but that doesn't affect the value, and I often hear people saying that. But one thing that is nice about VA appraisals is that you have an opportunity to rebut the value. If the value doesn't come in for any reason, VA actually has a formal process for you to try to get the value back up, where conventional appraisals don't. So they're a little bit more lenient in that case, which is nice. And the last thing I want to talk about in today's video is talking about using VA loans in our current market, right? There's an idea out there at the moment, because of how competitive things are, that you can't get a loan accepted, approved with a seller. You can't get your offer accepted because you're using a VA loan and doing 100% financing. Untrue, right? We're actually having success at the moment representing veterans purchasing at 100% financing, so it's definitely doable out there. It's a little bit more difficult, but you also need a professional, a real estate agent, and a mortgage professional, both that understand VA loans and can convey to the seller side how well qualified the veteran is, point out some of the pros of using VAs, how flexible it is in the loan process in order to also help get your loan approved or get your offer accepted, if you will. So just make sure if you're out there in this market, you're using VA financing, you're working with a professional lender, a professional real estate agent. As I mentioned, again, I'll put that link in the description below there if you want to connect with one of them in my expert network, or even myself for that matter. Would love the opportunity to help. Now, if you're watching this and you still have questions about VA loans, do me a favor, check out this video here. I talk about the 5 things you need to know when using a VA loan. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.